Okay, and we're live. Sorry, everybody, for being late. That's my fault. Roy, happy Monday. How's it going?
Doing well, better than Meta stock. How are you, Tevis?
Better than Metastock as well, sir. Can't be much worse than Metastock.
Yeah, it's a lot of news today. So we're going to talk today, of course, about Meta, whether it's cheap or not. Tevis says Meta is cheap. I say Meta is cheap, and we'll talk about it. Why it's down this much, the massive news. Anthropic hitting a new annual run rate, which is significant for the AI space. And of course, NVDA and the OpenAI partnership and deal related to data centers. We'll talk maybe a little bit about Google buying an interesting data set, possibly some about App 11, may even mention a little bit of Airtest systems. But first, Tevis, as a reminder, thank you guys for being with us. Put those questions in their comments, and we're going to definitely hit the Q&A here after this as well. But I did want to share a little bit of a move that I made in my portfolio, something I talked to you guys about on Friday, and I don't think I have time to make a separate video on this, so I'll just go ahead and do that here. I did do a post on X. Essentially, what I had talked about was FIGR had just really, really good earnings, really good line of sight for pretty incredible growth over the next 6 quarters. It may not be exactly 100% year-over-year growth for 6 quarters in a row, but more quarters, but it looks like that. And so I ended up, over the weekend, just kind of thinking about it a little bit more, and I didn't want to take it away from the non-fintech bucket, but I went ahead and broke down, SoFi, still very bullish, Nubank, very bullish, but the Super El Nino event I need to learn a little bit more about, and I'm still working on that article. And then FIGR has most of the aspects going for it that SoFi did. In short term, I think a lot more growth potential as well, with less risk, more asset-light revenue too. And, I noted just a couple of concerns, but I was thinking through this week and I'm like, okay, I'm a lot more bullish on FIGR than the percentage of allocation in my portfolio. So how do I fix that? And so I didn't sell any shares of anything, but I did have some options of Nubank, some options of SoFi, those leaps that I bought more than 2 years ago. And I ended up saying, you know what, I'm going to go ahead and take that and all my cash and buy FIGR leaps this morning. Stock was up 3.5% or something. And I'm like, you know what? I know in the past I've kicked myself when I'm like, I make this decision, I'm going to buy, and then we open up strong and I just wait. And boy, I don't know if you saw what FIGR did today, Tevis, but it was up a little bit today, which rarely when I actually end up buying does it do this immediately. But this is, well, I won't show that picture. Well, let me pull it up this way. It ran hard. I don't know exactly why it ran, other than just a delayed reaction to earnings and, of course, some analyst notes and upgrades. But it was a very, very solid day today. It's actually up, I guess this starts, this does include some of the post-market. So it's up actually about 13% today. So just kind of crazy price action on something I just bought. So I hadn't sold anything, of course, yet. But do you remember what I told you? I sent a message to you on FIGR over the weekend. Maybe it was on Friday.
Basically, that is cheap.
I gave you financial advice.
Yeah, you were like,
I said it's time to get into FIGR, and it's I don't know. Like, this is one where I really do see it more as a next year story, as far as what the stock does, but I also don't want to try to time it, and so I'd rather be in with the amount that I need now. So I got the amount of FIGR up to, well, because of the price action, a little bit north of 10% of my portfolio today. So I don't want to share that news since I was thinking about it on Friday. I did follow through, and it just makes sense for me. And we've talked about this before, to allocate according to core convictions. If there's something I'm like, oh man, I think this is a great opportunity, but it's 2% of my portfolio. What am I doing?
Yes. Is it too late to buy FIGR right now?
No. This is actually the share price 35.66. I think my average is like 32. So, I've been buying really over the last 6 months, and here recently. So today's buy was $40 strikes, or not $40 strikes. Yeah, they're $40 strikes for January 2028. I would love to get the 2029 options in there, but they won't be out until September. So again, I didn't want to wait. I have some 30s as well that are actually nicely in the money. All of those are up nicely, and the stock is up like 10% overall for me. So, I on these big green candle days, I don't really like buying options, but it was up 3.5%. And I'm like, hey, I know what I need to do. I know what I want to do. I'm just going to go ahead and do it right now. And I was fully prepared. Like usually when I buy these things, it's down like 10 or 15% that day. I'm like, well, but over the 2 years, it makes up for it. So, yeah, it was pretty crazy. But yeah, it's growing 100% year over year. You look at let me show you just a couple of numbers here right quick. So, price earnings growth ratio. I know this probably, let me see if I can zoom into this. This is just for evaluation here. So the PEG ratio is a 0.7. The forward price to earnings, because it ran so much today, is a 31.2. And this is a firm that's growing at 100%, actually a little bit north, with pretty high margin. 60% EBITDA margin is what they have guided for. And they're profitable. They have a major acquisition that's going to land in the second half. I was going back through the acquisition announcement, and they had a whole thing with analysts just to pick up some things that I left off on and over this weekend. And there's still a little bit more I need to go back through, but it's just everything that they're positioned with. Well, I'll show you like one other note here. By the way, here is the current standings. Tevis, did you know you're up that far?
I did not know that, but yeah, that's cool to see, I guess.
Everything that man drafts, it is turned to gold except for his first round pick, Robin Hood. Well, I guess a couple others too. But yeah, I mean, look at that. Just up 20% in such a short time. I'm pretty proud of 7, but man, that's phenomenal, Tevis. So congrats. Of course, you're doing better than that in real life too, so it's not just on paper. But yeah, okay, so FIGR. Let me pull up Mark Carney's. This, by the way, was a thing that Tanner put up there. People are still commenting on my PayPal video. He's another Canadian. I think that he might have been at the meetup, but I'm not sure.
Mark Carney?
No, Tanner.
Oh,
so I was joking. I was just saying why that was up in case people were like, "What in the world is that weird picture?" People are commenting and like, "Hey, PayPal's up 30% from where you sold us." Like, yeah, they don't maybe know what I bought. So let's pull up Mark here.
That's where you said Mark Carney.
I don't know why I always do that. I guess it's because of Canada. I blame Canada for everything. But yeah, Mike.
Why? Don't bring him into this. I was having a good day.
So this is showing issuance by self or securitization for HELOCs, and actually 2 of these are also partners of FIGR. This is the FIGR tranche, and you can just see like this is on the home equity lending side of things that they went up. I mean, immensely. Like you can look and see what they're on track for in 2026. And like the thing is, it's a little bit too early to tell because they've just started small and mid-sized business lending, and they've also just started a little bit less than 2 quarters auto lending as well. But they can bring all these things onto the platform. They have first lien lending as well, the mortgage lending. They're going to do this again with industry after industry, especially I think on the mortgage side with that acquisition. So you can just see them move from being a notable player. This isn't where they began this to just dominance. They're the big guys. And they're at like an 8 billion market cap now. Yeah, it's not too late to buy. But this is also a very volatile name. It can move up or down 10% a day on no news. Case in point today. So just kind of keep that in mind.
We are still waiting for the Stock Tank episode where you are supposed to be talking about FIGR because we have questions.
I hope it stays under 40 by then. I mean, even at like 45, I think it's still pretty attractive. But yeah, it's obviously if it's trading at 25 or 35, it's really attractive buy. So
yeah. No idea why you sold PayPal. The number was solid, just a matter of time to explode. Dude, it was just a matter of time for like 2 years for the poor guy. Leave him alone. And he bought Air with it, so I think he did fine.
Yeah, I bought 4 different names. Nebius at like $80 a share. I bought Air Test Systems. I think it was 22. It's up a little bit. I bought VG. I think it was at like 9. And I bought options, by the way, no shares. And so those went up more than a double. And I bought NVDA, which I think I made money on, but it's a stable coin, so I don't know. That's the only one that underperformed PayPal. But no, for me, like that's a fair question is the thesis was broken. I saw it as a value play emerging into a growth play under Alex Chris as they were reinvigorating the business, doing a lot of different changes. And I think over time it may have played out, but it was taking longer. And I understand why they fired him, even though I don't agree with it. But the moment he was fired, I'm like, okay, yeah, they're just going to focus on being a value play and even then I said they're undervalued. They are too cheap, but I think that there's better opportunities out there. And I was right.
Yeah.
And I'm happy for investors, by the way. Like, I'm glad you guys are not suffering in the 40 and under range. That was ridiculous. Here in the 60s is probably about where it should trade. Maybe a little bit higher, honestly, given the free cash flow. But there's no growth anymore. That's done.
So is FIGR something that you want to build into like a top 3 position?
Well, let me put it this way. I think FIGR might build itself into a top 3 position.
Just
Like over the next year.
yeah.
And I don't know. I don't think I would trim it, even if it got to like 25% of my portfolio. It depends on why. Like if it did what it was back in January, where it just ran to 75 for no reason, and I didn't have a position, I was like, man, I guess it's the one that got away. But on no news, I'm like, I don't know about that. Like, but the thing is, you can see the weekly metrics and everything, so there probably would be a reason for it. But no, this is one. It'll take time. It's not going to go up in a straight line. It's going to be very volatile, but lots of opportunity here. So I'm very comfortable holding this one for the long term. But I will take profits along the way. That's why I buy the leaps, is to take profits. Like, case in point, the SoFi ones that I took, Nubanks were actually a little underwater, sadly, despite the pretty good earnings call. So
Yeah, but Nubank has the international thing looming over it too, so it always like does kind of poorly on earnings and whatnot.
yeah,
A
yeah,
lot of them, like the same with a lot of them, like Mercado Libre, dLocal, like all these guys have that, cloud over them because they're international. The FX affects them too. But yeah, I agree with Figureman. And like we said last time, once the rates start to come down here over the next 12 months, Figure will eventually benefit, as well as crypto is going to catch a bid. And I think it's going to be an interesting setup for Figure going forward. $8 billion is a fairly small base to grow off of. So yeah, I mean, I don't know. 14% move today was kind of crazy, but just goes to show how undervalued this thing really is. It was at $24 at the start of the month on August 3rd. And yeah.
like for me, I think it should be trading at the 45 to 55 range, like right now. But that doesn't mean the market's going to comply. I think it'll be depressed a little bit because of rate cut uncertainty, rate hike uncertainty, and then the crypto thing. Like, even though the price of crypto barely impacts them, they do have a crypto lending product, but it's like 3 or 4% of their revenue, maybe. So yeah.
Yeah. We do have the Nebius hearing today. It is August 17th, and the hearing is going to decide, if Vineland can continue forward or not. That's happening today. Mind you that these hearings are like 4 hours of hearing, local residents and just it's really boring, but we will have updates for you guys. That's ongoing. I believe it starts at 6:30 and it goes up until late. But we'll get updates for you if they happen during the show. I should at some point do another Nebius video with the decision for Vineland, but Nebius is going to be trading tomorrow on the back of that news that happens on Vineland. The base case right now, I think, is largely that this is just a procedural hurdle, that it's pretty much a nothing burger from, if it's actually going to stop the data center or not. But TBD, we'll see what happens at the end of that session. We will provide updates in this show.
Yeah, I was kind of curious. I saw my one share start to dip, and I'm like, oh man. But no, it was interesting the way that the stock was moving today. But Nebius is violent and volatile, and nothing moves up in a straight line. So yeah, I'll be very interested to hear what that update is. If it's good and favorable, I mean, there's more room to run up. You might see 300 sooner rather than later. You ready for Meta?
Yes, It sounds like you're in a conference room far from the mic. All right. Well,
Me?
I'm definitely using the correct mic. He's talking about me.
Okay.
I don't know. Do other people feel the same, or is it just like, is this something? Anyways,
Can you throw up Greg's comment? I know you're marking things for Q&A, but I can hit that now because we're talking about FIGR.
Sure. And meanwhile, I can check my mic settings.
So I've said this before. It's going to take a while, but I think that this is a 10 to 20x opportunity. That was from 7 billion market cap. We're at 8, so you can do the math there. There's of course room for performance higher than that and lower than that. That's over a decade, by the way. So don't think like I'm saying it's going to 10x tomorrow or anything like that. But they've had a massive ramp with partnerships. They're offering new types of lending as well. They've shown a lot of success in the current markets that they're in, and it seems hard to bet against them. Not everything that they launch and do is going to be successful. Like the on-chain private equity network, the open network. I'm very skeptical of that, but it's such a small part of the business. I mean, it is a part of their flywheel, but yeah, it's kind of like the tech platform for SoFi for me, in that like if it ever does anything, that's awesome, but I'm not banking on it. So
yeah. All right. Let's move on to Meta. I think we can talk about that. That's one of the big topics for today. Yeah, Meta was down today about 3.5%, Roy, trading at $568. And one of the big reasons it was down, I mean, all of the hyperscalers were down, or a lot of them were down, but this is because they're heading to court tomorrow. Meta is, of course, heading to court tomorrow to hear opening statements for this youth safety litigation. Essentially, what happened was it was a 2023 lawsuit that was brought by dozens of states. I think there's 29 states now that Meta is involved in, whereby they're advocating that this is fairly addictive. So the infinite scrolling feature is one of them. The push notifications were designed to keep young users engaged for as long as possible. Pull this down. Some of the other claims is that Meta unlawfully collected personal data of young users without parents' permission. Now, this is a federal case because it's 29 different states. In this case, it's a California judge. It's going to be in Oakland. Funny enough, this is the same judge that proceeded over the Elon Musk lawsuit against OpenAI. I don't know if you knew that, but that's a little bit interesting. The trial is starting tomorrow. It's expected to last about 6 weeks. And the interesting part about this is that it's not a standard jury trial. There are going to be 8 members in a jury, but they're going to be in an advisory role, meaning that the judge is going to be the one that ultimately decides the outcome and the penalties. Now, we've seen some eye-watering penalty sums. People are saying, like, you know, the headlines are saying you can have a $1.4 trillion theoretical penalties, and which would be far in excess of what the most expensive penalty has been in the history of capitalism. That's not going to happen, realistically speaking. It's completely not. I think the more prevalent piece here, Roy, is not necessarily the sum that they're going to pay. Yeah, sure, they might pay a couple of $1 billion, but in the case of Meta, it's a slap on the wrist. Like even if it's $5 billion or $10 billion that they pay, it's going to be a slap on the wrist. It's not going to be $1 trillion or anything above $1 trillion. Like you can forget about that. In my opinion, the bigger piece here is not necessarily the fine, because the fine, I think, is going to trade the stock higher because there's certainty. There's no longer, an uncertainty with this decision. But it's more around the fact that the states are seeking product changes for under 18-year-old Meta users. So basically, they are seeking that these users who are under 18, Meta should be removing their infinite scrolling. They should be removing video autoplay. They should be removing the like counter for these user groups. And there's potentially more consequential like product changes that will come out of this case, in addition to just a one-time fee, which like, look, the one-time fee will suck, but it's not going to kill Meta. A lot of these product changes, I think, can materially change the business trajectory and the forecast that the market will have on Meta going forward.
Yeah. Yeah, that is. So let me start first on the penalty. Yeah, the 1.4 trillion, that is not going to happen.
Yeah.
It's basically like Michael Burry's under $1 Palantir. It's just like so ridiculous. But like, there's a scenario where you're looking at an extremely large settlement, depending on how this goes, or rather, not even necessarily settlement, but fine. And we could be looking at something. I don't know if I would say like $100 billion, but like 50 billion, 60 billion, I think is possible. You know, in a really good case scenario, maybe it's like, when I initially read that, Tevis, I'll be honest, I read the 1.4 trillion as 1.4 billion. I'm like, that's nothing. I mean, like, you know, it's just a bump in the road for them. Now they're trying to build. The hard thing for them, though, is I think it's going to be meaningfully higher than that. Like, I would be a little bit surprised if it's, you know, less than $15 billion, given all what was being put in this, how long this has been, the damages that have occurred. It could be less than that, but like, if we're looking at 50 or 60 billion, do you think that that's immaterial for Meta at that point, or what number do you think it is that really starts to impact them, just as far as the monetary amount? And then we'll talk about the forward stuff.
I mean, look, Meta reported Q2 about 3 weeks ago, and their total revenue for the quarter was about 61 billion ish. So it's not immaterial. The net income for that quarter was about 16 billion. These will make an impact. It's just they're one-time costs that it's a speeding ticket in the grand scheme of things. This is a company that's still growing 28% year over year. Advertising is up. All of these, the daily active users is up again, even though it took a slight dip last time because of geopolitics. So the point is like, it's not the business is declining and that this cost is going to take them under. I find this comment kind of funny. Their entire market cap is barely over $1 trillion. What do people think? This lawsuit is going to bankrupt them, that they have to pay 1.4 trillion? It's entirely not grounded in reality. But look, Roy, to your point, even if the fee is $60 billion, that's an entire quarter's worth of revenue. It's not immaterial at all. And like, the stock will take a dip on that, even though we will have certainty of that decision. It's not going to be looming, but I don't think it's going to be that high either.
So like, what are you thinking it is going to be then?
Well, I think it's going to be actually, you know, materially lower. I think I could see something around the $10 billion range, maybe less than that even. If you look at like some of the biggest fines out there, very rarely do they jump into the multi-billion dollar ranges. That's actually not like the base case at all. Don't forget that Meta has an army of lawyers working on this thing, and it's fairly ironclad to some degree. Yeah, I mean, look, you had big catastrophic outcomes for some of these companies. Like, if you remember, Bank of America back in 2008 had to pay 30 billion in a settlement, right? You had BP in 2016 had to pay over 20 billion, right? I think the largest ever was, I'm just looking it up here, the U.S. tobacco master settlement in 1998, where more than 200 billion was paid.
That's the biggest
that the tobacco industry agreed to pay to compensate the health system. That's for freaking tobacco, and that was 200 billion across a much larger scale. And so, you know, you have smaller suits, right? You have Meta has been fined before, right? In 2023, they ate $1.3 billion in GDPR fines. In 2024, Meta ate $1.4 billion in with Texas for capturing biometric data. In 2019, they ate $5 billion for the FTC's penalty over privacy failures. So like, every other year, Meta has a single-digit billion-dollar fine for something. I think this is just the next thing. And maybe this one is, let's call it 10 billion or 15 billion. That's a speeding ticket still. It's materially higher than the others, but it's 1 quarter's worth of net income. It's not going to kill the business. And the fact is that Meta has lost hundreds of billions of dollars of market cap in anticipation of this alone.
Yeah, so I think it's going to be higher than the amount that you said. I think that there's going to be a lot of correlation. It's not going to get surpass the 206 billion mark. I don't believe for big tobacco or come anywhere close to that. I don't think we're looking at triple digits. I do think that we're probably going to look at something maybe between 25 or let's say 30 to 50 billion dollars, because there are a lot of corollaries in terms of the widespread damage that it has done, and it's harder. I think to the one thing is I think it's harder to prove like, oh, it's social media versus bowling versus bad parenting, school system, and so forth. But I also think that there is this is going to be much larger, a step change larger than anything that Meta has ever paid before. So now in isolation, let's pull up Meta here just so we can kind of see what their financials are and look at some real numbers, and we'll talk about things going forward. And put it in quarterly just in case, and we can look just at the balance sheet. Cash and cash equivalents. Actually, no, we need to do more than that. Total cash and cash equivalents, because they have a lot. So this kind of gives you an idea. And then we can also just do, I thought they did have, yeah, they do have long-term debt. There we go. We won't look at all the total liabilities. There's a lot of leases and everything there. But you can see they're pretty close. But they do have like $90 billion. They have revolving credit faculties. They generate a lot of revenue each time. Now, they're not going to be free cash flow positive because they're building the CapEx. And really, I think that is the issue more than anything. Look, two things. One is, if they weren't doing all this CapEx build out, then fine. They digest that in a couple of quarters and they just continue to move on. But because they supposedly are taking serious meta compute, I think that there's a reason, and this may have been the reason, Tevis, why they only raised their low-end CapEx guidance by $5 billion. They realize like, hey, there's a scenario. This may not be settled for quite some time. And the sad thing is, like, as somebody holding the stock, that may weigh over the stock for a long time as well. It's one of those where I think from just a pure investment standpoint, I can never own the stock. It's very attractive here. Forward price to earnings here. PEG ratio is under a 1, which is pretty insane. Forward price earnings is a 17. It's trading at a 5 times enterprise value to sales. And of course, negative free cash flow, so you can't really use that one anymore. But going forward, you mentioned that kind of as we saw with that big tobacco lawsuit where they had to change labeling, the way that they approached everything. How detrimental do you think that's going to be for their business? And then secondly, because you own Meta, correct?
Yeah.
Has this shifted anything in terms of the thesis for you? So,
yeah. Okay. A couple things. First of all, I think that is exactly the more concerning piece of this lawsuit, and where I think the majority of the drawdown is centered around is not necessarily the fee, because that's a one-time fee. And even in the case of that tobacco fee, that was paid over a long period of time. You can pay these out. They're not like all up front. So even if it is, let's say, 50 or 60 or $100 billion over 10 years, Meta's not going to feel it. Okay.
Do you know if they pay interest on that?
Or, I'm not sure if they would pay interest, but the point is like they have a payment plan for a lot of these big payouts, and that's just the precedent that has been set. But I think this comment highlights it very well. The issue is not the outcome of this case. They can easily pay it out. The issue is the precedent and having more lawsuits upcoming as a result of this. There's 29 states in this one. There could be much more if this becomes a bigger deal. But look, the reason why I don't really see this as too big of an issue right now is because Meta is no stranger to having different fines, to having different lawsuits. The FTC, GDPR, all the privacy issues, Cambridge Analytica back whenever that was, 2018, 2019. Like I said, every single year, Meta has some hot water where they have to have some slap on the wrist and pay some fine. This is nothing new. It's just the latest, right? And don't forget, man, all of these big hyperscalers have their own form of issues with large legal bodies. I mean, Google, do you remember Google was down last year, 2 years ago, and it stayed down almost all year on these antitrust claims. People thought Google were going to get broken up, and Lena Khan was like making Google, a scapegoat for the whole antitrust. And guess what? Nobody remembers that now. Nobody remembers that now. Google went back to all-time highs. The market has short-term, a short memory span. I think it's going to be the exact same thing with Meta. It's going to be the biggest deal in the world that they're going to go, people are going to say this is going to kill Meta and this and that. And then guess what? They're going to have an eye-watering sum. Maybe it is, what you say. They're going to spread it out over a decade. They're going to bake it into their guidance, and nobody is going to care. The stock is going to get re-rated higher, and the train just keeps on moving, man. And it sucks for humanity, but it's great for Meta stock because this dip is a buyable dip. And I just think that that's what this is. And people are making a mountain out of a molehill when in reality, we've seen this every single freaking year as a Meta investor.
So I did just ask Jim and I really quickly just to see the initial period was actually up through 2025 for these payments. So they extended out every single year. The base payment amount was adjusted by the higher 3% or the CPI. So it'd be, if they did something similar, it'd be on the higher end. And there was, of course, a pretty large fee for late payments. And then there was a perpetual phase, which we're in right now, which I didn't realize, at $9 billion per year across all manufacturers, that they continue to pay all these states. I don't think it was 46 participating states. What's interesting, too, is they ended up securitizing, or a lot of states did. So they received just a one lump sum. And as a result, they sold them, much like you would with any kind of bonds. And so conceivably, they could securitize them on democratized prime. And all of a sudden, that's on FIGR's network. And so FIGR, no, I'm just joking. But I mean, it could happen. But no, this is one where it looks like that what you said is correct, that there is precedence, especially for something this large, to be divided over 10 or 20 years. So that would have less impact on them than what you said as far as the regulation that changes and what they can do with their own social media platforms.
Yeah. And look, a lot of people are saying that, I'm shilling for Zuck. I own Meta stock. It's my third largest position because I want to take advantage of the fact that Meta hasn't done much this year. I don't personally, let me throw up this comment. Hold on. I don't personally believe that they're not guilty. Let me be very clear about that. I believe that what people are accusing them for, they've done. I just don't think it's going to matter in the grand scheme of things. I'm not defending Meta. I just have a little bit of a defeatist attitude based on recent history of how these suits go. It's these companies that are now gone international, have such a large user base and such a deep cash pile that not much can be done about them other than a slap on the wrist, which some judge can, claim as a skull on their mantle to say, hey, we took down Meta and we did what was right by our people. And at the end of the day, nothing is going to change, right? I agree with this too. Parents need to take responsibility. Meta might have some serious product changes, some feature changes, some more disclaimers, all of these things. It's like when I log into my DraftKings account, the most annoying thing that I have to do, Roy, is not, logging in with my biometric data. It's the fact that there's another screen after that I always have to click, yes, I'm not drunk. I'm, responsible to play. It doesn't stop anyone. It's like the packets on the cigarettes. Like they don't stop anyone. If you have a warning sign, like people are just going to do what people are going to do. But at the end of the day, all of these things are as a result of lawsuits or preventing further lawsuits, right? So I just think that it's a temporary thing. It doesn't fundamentally alter the bull case for Meta. It doesn't make the business any worse off. Yes, there will be more lawsuits in the future. I'm not, denying that, but they're all going to be baked into the expectations and the guidance, I think.
Yeah, and for me, they're definitely guilty. How much guilt and responsibility? It's not Meta is guilty for everything. Parents are guilty for nothing. That's obviously ridiculous. But that's the reason why I could never invest in Meta. Is I have seen the impact, not on thankfully on my own kids because we've been very careful, but on many others as well of social media, and it's not all negative, but almost all of it is. It's just I've seen it like tobacco, and I think that they're going to get a similar hit. And I agree with you, everything you said as far as like forward revenue and everything. But like given the precedent with big tobacco, assuming Gemini is accurate, and I think that it probably is, if we're looking at in my worst case scenario of the 50 billion, that might be drawn out over 10 years. That's $5 billion plus, some interest just tracking with CPI or whatever. That's nothing for Meta. So you're right. It's a large amount, but it is very much a slap on the wrist. Now, if it does land, obviously with like a $1 trillion or whatever, that might be paid out after over 50 years, and so that Meta is not going to cease to exist as a business. But there, it is going to be like an overhang for quite some time. So given that overhang, Tevis, and of course it's drawn down even further from a valuation standpoint, it looks very cheap, but it also might continue to look very cheap really until this is resolved. Are you saying, hey, I'm going to double down here? You're going to hold what you have, or you're just going to sell because there's better opportunity short term?
Yeah, look, I wrote another cash secured put on Meta at $590 for December 18th. I collected $6,000 in premium for that, for essentially agreeing to put 59,000 collateral. I don't think Meta is going to be trading under $590 by December. By that time, we have another earnings coming up in November. We have most likely the resolution of this lawsuit, and people are going to realize that, hey, look, this stock is down year to date. Its current price to earnings ratio is about 15% below its 10-year historical average of 26. Its forward price to earnings ratio is cheaper than the market. It's 18.4, and the market is in the high 20s, I believe it is. It's like its PEG ratio is under 1 for a hyperscaler. You know what I'm saying? Like, it's fundamentally misvalued, and it's going to get re-rated higher. But look, if it does, for whatever reason, trade lower, then I will own happily another 100 shares of Meta at an adjusted cost basis of $530 a share, which is the 590 minus the 60 that I collected in premium at 530. If that's the case and Meta decides to go into the 400s, well, I'll own more Meta, man. That's like it. I don't know how to say it anymore, right? Like, CapEx is a concern, sure, but it's only a concern unless they don't have any ROI on that CapEx, or until they have ROI on that CapEx. And number two, it's only a concern if they don't reduce that CapEx. But back in 2022, Brad Gerstner wrote that letter. He said, hey, Zuck, you're spending too much money on Reality Labs, and I get the vision, but this is not the way. Meta cut it down, had layoffs, restructured, and turned the business around, announced a dividend for the first time ever. And the business did like a 7x off of the lows in very short order, getting entirely re-rated by the market. I think we can have another similar event happening with Meta because we're in a similar setup, right? Reality Labs is spending too much money. I agree. I don't disagree on that at all. AI CapEx buildout, we're not going to see the ROI for the next little while. I agree. But they're all solvable problems. They're all short-term problems. And I think Meta is going to, they've been resilient for so long. They're going to continue to do so. I mean, it's funny, Roy, I don't know if you saw this or not, but over the weekend, I think Zuck was on a podcast or an interview, and he was saying like, hey, I really admire, what Elon did with X, the fact that he like fired 80% of the people and it drove up efficiency. And I reposted and I said, look, are layoffs coming to Meta? Because that would be bullish for the stock, obviously bearish for the people that get laid off, but bullish for the stock. Anyways, I think they're going to be fine. I think this is it's not a nothing burger. I don't want to discount it to say it's that, but it's temporary.
Yeah, I think that you're probably right. I personally hope, and I'm not rooting for anybody to lose money. I really loathe the company. So I hope it's a lot more than a slap on the wrist. But regardless, this probably will at least cause them to make some changes, maybe layoffs. Yeah, watermelon was a big thing. Rihar Jark had a really good post on X. I don't think I'll pull it up here, but yeah, he talked about that. No, if I was just purely from an investor, didn't care about social media stuff, and that's fine. I'm no judgment on anybody else. I'd be buying it here, but for the long term, I do think over the next probably couple quarters, we'll have to see, obviously, but with the CapEx concerns that people have related to all the hyperscalers, not just Meta, the least ROI and frankly, the worst framing of the narrative in the earnings call, plus this massive lawsuit. Like if we had the stock draft today, wouldn't be drafting Meta at all. I think that there's going to be overhang, for at least half a year. Could be wrong, but I also think that you're right in that, going back to your thesis of the least favorite of the Mag 7, buy that thing, and you're going to do quite well within the next year. I think that's also right too. I just think there's going to be definitely some chop. would it surprise you if Meta went under $500? It notably, well, let me show you guys this. This is not, TA or anything. It's just the chart here in Fiscal AI, but right here at Liberation Day was really the only time, or right around it. I think
Yeah.
Liberation Day was slightly earlier. And since then, they have printed a lot of money. They built a lot of things. We've not seen it go below. Where do you
Yeah.
think this actually bottoms out?
Yeah. Maybe I can dovetail this into this question, and thank you for the donation. Do you think Meta under 500 will be a soft landing? Look, technically speaking, we are making lower highs, and we're keeping the $520, 524, I think is where we sort of double bottomed. That's where we bounced off earnings. I think we could break into the 400s, but if we do, I think we're going like, straight to 450 or whatever the Liberation Day lows were, and trying to retest that range again, 480. Can it happen? Sure can, but I don't think if it does happen, I don't think it's going to happen for long, right? Meta announced earnings, and immediately over the following 5 days, it was just pure green on those days, and it bounced from 500 to 600 in like a week. I think Zuck, again, this is the beautiful thing, Roy. This is the beautiful thing, is all of the harbingers of their destruction are levers that they can pull forward and backward. If they fall under 500 and Zuck starts to panic, or the management team starts to panic, guess what they're going to do? They're going to release a new model. They're going to announce, oh, we're going to sell excess capacity. Just as a rumor, we could do that. Stock bounces up. They're going to cut CapEx if they see the need to cut CapEx. They have so many different levers that they can pull to increase the stock and get the market excited about them again. Yeah, they could definitely lay off another 1,000 people or 5,000 people or whatever the case may be. The stock will bounce off of that. There are so many levers that they can have at their disposal to make the stock go back up because they've done it before. And I also agree with this. If this hits 450, I'm loading the boat. And I don't know, man. Meta might be my number one position if this hits, 450. I'm not even joking. It might be like a 20 to 30% position for me.
Yeah, no, I don't blame you. I think it's attractive here, and yeah, 450, obviously. But the one thing, listen to, I guess, I wouldn't listen to the 1.4 trillion, but if it seems like as things are progressing under this lawsuit to a higher and higher payout, it can become more meaningful at some point, both in terms of the punitive measures that are taken that do change the trajectory of the business more so than the cash payout, but that too, it might end up changing their ambitions as far as CapEx, which they're already struggling with. So yeah, but under like 450, I would be a buyer there if I could, but I can't.
Yeah. Let me read some super chats because we've been ignoring them. Thank you, Gangster Travis, for the $2. Cheeseballs. I agree with this. My mom's neck got injured while scrolling Facebook 3 years ago, thinking about suing Meta. This is satire, obviously, but it's ironically very on brand with a lot of the lawsuits that Meta's having. It's like, oh, I got addicted to social media as a kid, and now my life is ruined because I've been using social media nonstop. It's like, well, yeah, welcome to the other 3 billion people on earth that use Meta products. Like it's baked into the cake. That's how they form their algorithms, is to try to capture attention. And that's what they reward. They reward time spent on the app, right? So if people want to, yeah, exactly. Where are the parents? Well, nobody's asking that in the jury, are they? Cheeseballs again says, sold all my Nebius at 280 to short Meta, question mark. I think this is also satire. I don't know. But if you did, it might work out for you in the short term. I don't think it's a move that I would have done. Let's put it that way. Thank you so much for the $2. And then Tevis Fan Club of Mozambique says, nice to meet you at the meetup, Tevis. You rock. Thank you so much. The meetup was a lot of fun. And that's it. Let's move on.
I would be, if I was short Meta, I would be quick to take profits. It's these hyperscalers, they just don't stay depressed that long. So yeah, just be careful.
Yeah. It's going to be very interesting to see the arguments. It's like, oh, well, Meta has infinite scroll and I'm addicted to that. It's like, well, have you tried YouTube? Have you tried TikTok? Have you tried literally anything else? It's like all of these guys copy functionality from each other. Meta has daily stories. And if I feel compelled to, follow my friends, do you have Snapchat? Like all of these guys use the same tactics. You know why? Because they work. They work. It's a good mousetrap.
Yeah, purely from a business standpoint, you would like your customers to be addicted to your product.
Yeah.
It's not great if the addiction is something that's really unhealthy. But yeah, regardless. Speaking of hyperscalers, I wanted to share this because I thought it was pretty interesting. Kind of related to social media as well. So Spirit Airlines went belly up. And in the bankruptcy, there was this interesting tidbit that this person found that Google is looking at buying all their data for 10 billion, or not 10 billion, $10 million. 34 years of operational data. It's really interesting. This data has value, it has worth. That's one of the reasons why it's a little bit surprising to me that Meta has so underperformed and underachieved, because they have access to it, just tons and tons of data through all their social media platforms. And a lot of the hyperscalers do. Not all of them do, certainly. So yeah, this puts an interesting valuation here. So I was thinking of implications from the Meta lawsuit with, like you said, Snapchat, with Reddit, there's others as well out there. But on the other side, their data has value. So I guess outside of the one that we talked about, Meta, how do you see the others performing from here? Do you think the market is going to be more focused on how valuable that data is? Or do you think the market is going to be more focused on lawsuits and lawsuit risk as it relates to social media addiction for adolescents?
I think in the short term, the market is always focused on what has the higher level of uncertainty. Okay. The lawsuits are front of mind because we don't know what the claims are. We haven't even heard a lawsuit, right? We haven't heard opening statements. We haven't heard any of the arguments. I mean, we're going to see them next week. That's going to be interesting. Maybe I should make a video on that. But I think the Google antitrust lawsuits are a good framework to thinking about these and how we might navigate our way through these. From a data perspective, the Google Spirit stuff, I think, is pretty genius, honestly. And similar with Meta, hey, here's one framework, a mental model to think about it. Let's say the lawsuit is worth $10 billion from payouts or penalties. Is that higher or lower than the value that they get from all of that data, from having done this versus never having done it at all? Arguably, you could make a case to say, hey, even if Meta ends up paying $10 billion, because they've done, these addictive core loops, let's say, with these populations of users, they got way more data that is in excess of $10 billion. Why? Well, because it helps from their advertising revenue throughout this entire time. That subsidized that cost, number one. Number two is it helps train all of their AI models for them to get an added edge. This is why Reddit is valuable, is because of the data. This is why all of these companies are going to ultimately be proven valuable, because we are running out of organic data to train all of the AI models now that everybody is locking up their shop. And it started when X said, hey, look, you know what? You're going to have a subscription, or you're going to have a user to, access the data. It's going to be behind the paywall. You can't scrape anything. All of these third parties sort of failed, right? Same with Google, right? If Google and Spirit, Google wants to buy the data for Spirit, I think that's a good move, because it's going to help Google's AI. It's going to help Google Flights. It's going to help all of this ecosystem, essentially, for a very marginal price, right? So that's the other way you have to think about these things. It's not like, oh, well, Meta had a lawsuit and therefore they're going to pay a fine. It's like, no. What is that fine relative to all the value that they got as a result of the claims of that lawsuit? And is that higher or lower than the fine that they ended up paying? I would argue that in a world supercharged by AI, where everybody is fighting each other for the data to have a tiny, tiny competitive edge over their competitors in AI, that, hey, Meta actually probably did a smart move of shipping first and asking questions later, and basically asking for forgiveness and not asking for permission.
We'll see how big that find is, but yeah, I agree with you. The data is very valuable, and having access to fresh data all the time, that's one of the things that'll keep your model different, because a lot of times these are being trained, especially with distillation, off of models that already exist or data sets that have already been trained upon, and they can be a little bit different. But there was a lot of talk about this, how all of these models have just felt more samey, that they're a lot less compelling than they used to be. Whenever there'd be a new one released, you're like, oh my goodness. Now, there are exceptions, of course. It seems like Mythos and Fable certainly hit the ground running, but there's certainly some truth to that. Bot figure at 31. All right.
Cheeseball says bot figure at 31. Let's go.
Rain wondered at 6:53, said, I'm curious what Roy is drinking. This is the Alani Nu cotton candy drink. It's very much a girl drink, but yeah, it's, if you like the taste of pink cotton candy, and I do, it tastes exactly like that. And I mean exactly. It's really good, actually. I like the Alani News a lot better than the Celsius usually, but it's very sweet. So, and if somebody asks, how can you be drinking caffeine at this time? I'm an hour earlier than Tevis, or yeah, and it's just like this is how I drink it.
Wow, the ASMR too. This is
and by the way, I did that more for Tevis because he can't have energy drinks right now, or he's not having energy drinks, and you were tempted, so I probably shouldn't have done that to you. I'm sorry, but
I had a coffee before the show, and that's the only thing that sort of gave me life. But yeah, it's been a long day.
There's a few other smaller topics that I know that we talked about. I don't know if you want to touch on Nike or AppLovin, or we can talk a little bit about Air or anything else. Was there anything you wanted to hit, or do you want to just jump into Q&A?
Yeah, I think two things. Number one is I want to talk about Anthropic's $200 billion revenue target for 2028. I'm sorry, what is going on here? Because I made a post on X and I said, look, if they're already tracking for 200 billion in 2028, knowing Dario, he's going to go for that biggest IPO in history type valuation over SpaceX. I think it's going to be 2 trillion. I think we're going to hit we're going to see Anthropic in 2026 be the biggest IPO, not just in this year, but ever. But yeah, the run rate. Let's pull it up here.
Yeah, it's important to note run rate is not revenue, but yeah.
Run rate is just the last month multiplied by 12. Anthropic run rate jumps 7x ahead of IPO. So July at 65 plus billion versus 47 billion in May versus 9 billion at the end of 2025. They also reported more than 11.5 billion in preliminary revenue for its latest completed quarter, up from 87 million a year earlier, while posting positive adjusted operating income.
That's impressive.
They've confidentially filed to go public to make it its Wall Street debut as soon as this fall. And yeah, 200 billion is the number that we're looking at for 2028 revenue, is what they have line of sight in right now. That's crazy, man. That's crazy. So if you look at this IPO at $2 trillion, do you want to buy it, or what are you thinking about Anthropic at all?
No, I talked about it a while ago when it was like, I think maybe 250 or 300 billion. I'm like, oh man, I'd love to own Anthropic. It was the only one of the private companies that I would love to own at the valuation. We're well past that. I don't know that it'll debut higher than SpaceX, but it might. When SpaceX debuted, I was like, okay, yeah, this is going to be the largest one for like 20 years. I'm not confident in that anymore. That annual run rate, we'll see how real it is, if it's just a talking point. But I mean, when you're already hitting 65 billion, you can see the ramp is pretty clear. even like conservatively, it's not hard to see it be like 120 to 150 billion. So 200 is not really that far away. Operation margin, having that profitability is important too. So I don't know, but for me, no, I wouldn't be touching it. I think that even with that run rate, it is going to be incredibly expensive, and IPOs do what IPOs usually do. It's also not going to carry the Elon Musk premium, which is probably going to prop up SpaceX a little more than it should. For you, Tevis, what about you? Are you going to buy it at IPO at 2 trillion valuation?
I don't know, but I'd be much more tempted to buy Anthropic at IPO than I was SpaceX at IPO. And I do think that Anthropic will absolutely go for higher than SpaceX. These numbers are staggering, Roy. Last year, you were wanting to own Anthropic at 250 billion, valuation. And meanwhile, for 2028, they're like, we're going to make that a revenue. Like the latest ARR is over 65 billion. So this company is growing in an incredible pace, and I don't know, they're firmly in the first place for the AI labs. I think they're going to continue that streak. I think, would I buy it at $2 trillion? Possibly, possibly.
Wow.
But I think the interest is going to be higher than SpaceX's interest. Even though Elon has a dedicated fan base of people who would buy any product that he puts out, I think a lot of people have seen the potential of Claude, has seen the potential of the coding aspects that it has, of Mythos and all of this other stuff, and they like it's much more grounded. It's something you can see and you can feel, you can touch today. Versus SpaceX, it's like, oh well, asteroid mining and space data centers and all of this, and Starlink is like the most grounded, realistic. You can argue the data center side with Colossus and TerraFab is probably a bigger compelling factor, but I'm just saying from a perception perspective, right? I think Anthropic is much more tangible as something that retail might want to get into relative to SpaceX. So I think there's going to be plenty of demand even at 2 trillion valuation. And I think these numbers coming out right now, like that's not coincidental. I think they're just getting the market sort of still primed. We might get a new model ahead of the IPO. If I was a betting man, which I absolutely am, I might even bet that there's a new model coming out before the end of the year, because I know that Anthropic wants to IPO before the end of the year. And so I might say, go on Polymarket and say, hey, look, I know that they're going to pump this. I know that they want to be the biggest IPO. I know that there's a lot of demand out there. What better way? What better way to heighten that demand for your stock than releasing a new model that tops all of the charts for efficiency?
That is a good point. And on that, I want to talk a little bit more, but I want to give thanks real quick. Erica, thank you for your super chat at $10. She said, I wish I could grabbed air. I will not miss out on FIGR. So make sure you guys always do your own research, especially with these very volatile names. Even if you buy exactly what I buy when I buy, that's no guarantee. Take case in point PayPal. And then second, if you don't do your own due diligence, as it's being very volatile, you might get shaken out and then miss out on a lot of gains. So, but yeah, thank you for that really kind comment, Erica, and for the donation as well. Now, for my perspective, it's a lot easier if you're looking at a 200 billion annual run rate. Go ahead on this.
Just thank you, Mexico City Manuel. He thinks you're Canelo Alvarez. So you've heard that.
If you're looking at 200 billion annual run rate, you are implying that data centers, there's going to be a whole lot of need for inference. I think that we maybe are still underestimating. I've been doing a lot more research on this, where the demands are going to be for data centers. We're building out like crazy. I don't know that it's enough. And I think that what's keeping it from maybe being enough is like the political pressure and some of the supply chain logistics issues. David Sachs mentioned this on the All In podcast actually fairly recently, where he's like, ironically, the moratoriums, the pauses, the political pressure, the NIMBYism, that's going to pretty much ensure that these are going to be in high demand for quite some time. And 200 billion implies there's going to be a lot of need that. So for me, anyway, it's a lot easier to invest in more in CoreWeave or add some Nebius, even buy IREN. I've actually been thinking about buying some IREN before their earnings call. But yeah, I don't know about that. I ended up buying FIGR instead, so there's no money there. But no, I actually thought about it. I was like, this is the demand is just insane. And then related to the demand, pivoting
Yep.
to the last piece of news, because I know that you wanted to cover this before the Q&A. NVIDIA announced that they are providing more than $100 billion, apparently they have infinite money, backstop for a new massive OpenAI data center in Ohio. This is per Financial Times. The details are NVIDIA will provide credit support for the land, power, and shell for the facility capped at $105 billion. Data center is being developed alongside a SoftBank-led energy companies. They'll invest $1.5 billion into SoftBank Energy. An energy company is founded as a part of this group in 2019. OpenAI plans to lease as much as 8 gigawatts of AI computing power at the data center in Pike County, Ohio, which will take until 2032 to complete. And this will mark one of the largest AI infrastructure deals yet. This, if Europe is a super continent for AI at 30 billion, this is a little bit higher. Thoughts, Tevis?
Yeah, I saw something else that NVIDIA was going to cut its OpenAI data center backlog from 250 billion to under 120 billion. But I didn't see a lot of people talking about that, so I'm not sure how substantiated that is. Yeah, look, man, the build out continues. It's going to be really interesting, man, to see if all of this build out is an oversupply, because it's sort of like real estate, right? Where you're not really going to see the benefits of this for years to come. And then you have to predict that this supply is going to sufficiently meet that demand and we're going to have a balance. But what happens with real estate is you always have moments of supply demand imbalance. Either you have too much supply, not enough demand, and prices are low, or you have too much demand and not enough supply because the build out periods are so long. And so for this, we're having consistent news articles around the build out process, but knowing that none of these builds are going to be concluding this year, right? Nor many of them next year. It's going to be mostly 28, 29, 30. And I wonder by that point whether we will have gotten closer to meeting that demand or whether that demand is actually even further than we have forecasted so far. And all of the news that we're seeing is, in fact, too conservative as opposed to too bullish. Because right now, the biggest fear is that we're building so much that the demand is not going to be there. And all of these guys are going to be left holding a bag. But what if it's the opposite? I don't know.
It's the circular revenue thesis of the Bears has gotten a lot stronger this quarter. I used to argue against it, and now I'm like, yeah, I can't. You're right. And there's some risk there. NVIDIA is going to be interesting. Like their earnings call is next week, next Wednesday, I believe, after hours. That's going to be one that's going to be fascinating just to hear them touch on. So there's been so much news this whole earnings cycle related to NVIDIA. A lot of new partnerships, agreements, and these sort of things out there. And I think analysts will probably ask and say, hey, where's all this money coming from? Obviously, they make a ton of money, but we've seen the headline amount is extreme. Now, not all of it is NVIDIA. We saw, of course, the case in point with the Apollos and the Goldman Sachs last time that's in partnership. So only some of that's coming from NVIDIA. But it's right for investors to ask that question. So it's good, though, that these things are being built out. There's a need for it. It's great for me as an NVIDIA shareholder, I think. Yeah, I don't know that we'll see too many more quarters like this where NVIDIA can just say, okay, we're going to take care of you guys. Because it's Nebius that will take care of you.
Nebius sure will, my friend. Let's go into Q&A. What do you think?
Yeah, let's do it.
All right, Q&A time. So let's get started. We have 26 questions that are currently bookmarked. Let me get rid of the super chats. And you guys can ask a question. We'll bookmark it. Let's get started. Either of you interested in Iron heading into earnings? Roy?
Yes, but I bought a lot of FIGR today. I had been thinking, actually, honestly, over the last week of maybe getting a small position in there, larger than the one share in Nebius, but it's more of a being undervalued, like I think substantially. And there are some good things about it. I don't like the leadership, so it wouldn't be a long-term thing. It would just be a swing trade. But right now, I don't have the money for it. If something really runs hard, I take profits, or I have an unexpected windfall coming in, then but I am interested, even though I'm probably not going to buy. What about you?
I'm not going to buy. Yeah. I mean, look, there is something to be said that CoreWeave and Nebius both pumped on earnings, and as a result, Iron only needs to have the bare minimum. Like, forget about a hyperscaler deal. Even if they just report good numbers and they say that we're still on track, that I might, go higher. I thought about it today, actually, separate to this question, to say, hey, how would I play in Iron earnings? Would I buy shares in the right covered calls? Would I sell cash secured puts out of the money or in the money? And then I realized, you know what? There's always a possibility, however small it might be, that earnings tanks and I might be left holding shares of Iron that I just don't want to be holding. And so I said to myself, look, you're already up. Don't take on unnecessary risk with stocks that you don't want to hold. And so as a result, I'm not going to be playing Iron's earnings. I think they're going to do well because I think that we are in a part of the macro that the AI thesis is still very much working, but it's not something I want to hold. And as a result, it's not something that I'm going to play just to try to get a quick cash grab. Like, that's not with CoreWeave and with Rocket Lab. It's a quick cash grab in the form of a swing trade. But at the end of the day, if that went south or if they kept falling more, both of those are stocks that I'm comfortable holding. Iron is not.
I am curious. I know that because they've done the pivot from crypto towards data centers, it looks like that'll be an overhang in terms of like the Bitcoin price, really until the first quarter of next year. So, but it feels like I could be wrong. It feels like the market is ready to ignore that, or at least mostly ignore that, despite the headline. Like, you might see algos trade it, whatever. I think A, it's known, and B, we're starting to emerge out of crypto whenever see some price accumulation. And C, that's not the main story of Iron going forward.
Yeah, agreed. Hi, Tevis. Really like watching your videos, but what happened to ServiceNow? What happened to ServiceNow? ServiceNow is down today about 5%. I don't think any news came out for ServiceNow. It's trading at $117. I mean, look, I don't see anything wrong with ServiceNow. I still think it's very cheap. I'm still bullish on ServiceNow. Selfishly, I hope it falls more. I would definitely be a buyer again if it kept falling. But I don't think there was any specific news with ServiceNow. It's just the market decided to sell off.
Software didn't have the best day. It's sector related, I think.
You know what, Roy? Actually, speaking of sold off, we got to get more interested in Lemonade, man, because Lemonade sold off 5% today. It's under $50 a share, which is staggering. It's incredible, man. It's under $4 billion market cap. And, this is one that has made me money consistently, but it's not been in the long-term portfolio at all. It's getting more interesting here. Obviously, it's not like, profitable. They're going to be profitable here soon. They're on that track. And as we know, that bodes well for stocks that flip into profitability. But it's something I'm keeping an eye on.
I'm more interested in AppLovin. I actually thought you were going to say AppLovin, but also, software as a service and the advertising. But I need to. I mentioned today, Amit had this larger post. He said he talked to a former AppLovin employee over the weekend, and it's a good one. A lot of people are interested in it just because it's growing rapidly. They are doing a bit of a pivot towards e-commerce advertising specifically, but it's getting cheaper, and it's already not expensive. It's just a question in my mind of like, is this another The Trade Desk type of story? And I don't think so. Like, it's a very different form of advertising, and it's not something I think easily competition will gobble up. They're positioned well there, but yeah, there's a lot of like, that's the thing is I think we've bottomed for sure with SaaS, but there's still like looking at a lot of quality names. I think ServiceNow is one of those. I'm not going to buy ServiceNow, but I think it's attractive here. Palantir's run up a bunch, but so that one I'm not actually buying right now. I stopped my world's slowest DCA, just bought some shares, and it ran up a bunch. Apple Oven's very interesting. Wix is still very, very cheap, even though it's up substantially from where it bought. There's a lot of names like that. So, we can sometimes get into recency bias and be like, hey, this is up 20% over the last, month or two. And that doesn't mean that it's overvalued or undervalued. It just means it's run up a bunch. So sometimes you realize like, hey, it's up 20%, but there's a lot more to go. So it's not wrong to, say, hey, let me get in. But yeah, ServiceNow, little weakness, probably sector related.
Yeah. Still really interested in ServiceNow, man. I think I hope it falls more, honestly. I hope it falls to 110 and even lower so that I can get back into that position. But yeah, not bearish on that one at all. Is there any news on Violent? There's nothing yet. Apparently, there's a couple of people who are talking and they're hearing their case and they know nothing about what's going on. Honestly, man, I suspect like a lot of these people are probably like paid. They're not actual locals who are, I don't know, but that's just me tinfoil hatting. But no news on the decision yet. We're not going to get it on this stream. It's going to probably come later. I'll try to make a video about it if I have time later tonight. All right. Are you buying the meta dip? Seems the court case is overblown. I agree, Robin. I own a bunch of meta. I wrote a cash secured put, another one on meta. So I have 2 open cash secured puts on meta.
Yeah.
What do you think about Meta's valuation? I think it's cheap. It's cheaper than the broader market. It's one of the few hyperscalers that's actually down year to date. I think they're going to do very well. They're growing. They have a lot of cash on hand. Yes, they're spending a lot on CapEx, but they're going to see the ROI of that CapEx very soon. New models are going to be coming out. I think Meta is going to do just fine. Meta or FIGR? Okay, so Meta is my 3rd largest position, so I like it a lot. But I think you also have to understand like the rationale. If I had a $10,000 portfolio that I was trying to grow as much as possible, I'd probably go FIGR because it's an $8 billion company. It's very, very small. If I had a $1 million portfolio relative to that 10,000 in the first example, I'd probably go Meta because I would want to preserve that and I want some security. But yeah, I would say FIGR is a higher runway. And Meta right now, it's just like, hey, you're getting a deal, but what I can expect from Meta is maybe a 20 to 30% run. What I can expect from FIGR is a 2 to 3x run. Is that fair, Roy?
I mean, I think FIGR has a lot higher upside, but
yeah, that's what I'm saying.
Yeah.
Thank you for Jewel. I don't even know what the fuck jewels are, but thank you for jewels.
I know that there were something, but yeah, I need to research that. But yeah, thank you guys for all the jewels.
Yeah. How much percent of cash you guys holding in your portfolio at the moment? I have about 5% of my portfolio in cash at the moment.
Yeah, it's around a 1% for me. I think it was getting close to 3 because I'd taken some short-term gains on some positions. Money's always coming in a little bit too. So, but yeah, I deployed a bunch of that into FIGR. Probably a little under 1%.
Yeah. Are we both in ServiceNow? Neither of us are in ServiceNow. Thoughts on Microsoft short term?
I think it's really attractive. I think they're positioned well. I think the market appreciates that they're going to be free cash flow positive over the next 12 months. They will go negative at some point because of the CapEx build out. But yeah, it's one of those, like just what we were talking about, that it's a SaaS name that was beaten up, spit out, and just left for dead. Not really, but if you look at valuation, it's really cheap and just silly. And I almost bought. I'm not really that excited by Microsoft, but it's run up some. But I still think it's quite attractive here. Short term, like the one thing I'll say is it's going to move along with the SaaS basket, and I don't have a great amount of confidence in terms of how that'll move in the short term. So I'd say that there's probably upside. I did take it quite early in the stock draft, and it is up quite a bit from that point.
Yeah. Kieran says 5% for Teva is like 50% for the normal guy. Yeah. Well,
Yes.
the 5% sounds like a lot, but then you have to keep in mind that like my margin commitments are maybe, up to 10% of my portfolio. So I'm like, okay, well, the 5% only covers so much. At what price would I go all in on Meta? I think around the 400 range is probably when that starts becoming a consideration, or at the very, very least, buying a lot of leaps on Meta. So it's not all in, but I'm buying, 2029 leaps once they're out very shortly here in the next couple of weeks. I think that could be a very lucrative play. I don't think that Meta is going to fall to those levels. It would be the cheapest the stock has been in several years if it does. But depending on how this lawsuit goes, after we get discovery, after we get opening statements, after we get the main arguments heard, it is a California judge, right? So it's a little bit different, and midterms are coming up. So don't kid yourself into thinking there's no political angle here as well. Meta does pay quite a bit in lobbying as well. So could it go lower? Yeah, sentiment we've shown through these shows weekly that it's very fickle. And yes, Meta could fall under 500. If it falls under 500 and it breaks that support, then you could be looking at 450, maybe even 400 over a course of weeks and months following that. I would be a heavy buyer at that point. Right now, between 600 and 500, I'm really only selling cash secured puts because what we've seen it's bounced up and down, trading in a range between that rate, like 650, call it to 530. If it breaks below and we see prices that we haven't seen all year long, I would go into it with shares. If it goes under 450, I would go into it with leaps. That's probably how I'm mental modeling out Meta.
Yeah, and I can't buy it, so I won't comment on the. I can't.
Thank you, Highland, for the 10 gifted memberships. Really appreciate that. Thank you so much. Congrats to folks that got memberships. Meta has traded in a range for a while. Exactly. Yeah, I agree. Prince Bozo says California judges are big virtue signalers, could send it down to the 400 for juicy buys. Hey, man, again, like I said before, this is the same judge that ruled on the Elon versus OpenAI case, right? So it could definitely happen. Guess what happened right afterwards, though, right? Like Tesla moved their headquarters, people moved out of New Jersey and California jurisdictions for more favorable jurisdictions because of these things happening. Would Meta do that? I don't know, but actions have consequences. Let's put it that way. Have you seen Zeta earnings? In fact, that Palantir wasn't even in the guide.
Yeah, there's a lot of things they didn't put in the guide, and they tend to sandbag quite a bit. So I think it was 100 million, potentially what the CEO had indicated could come out of that partnership. And I know Palantir quite well, so I don't think between his reputation and between what Palantir does that is really necessarily overstating things. Maybe a little bit, it could be a little bit optimistic, but yeah, it's pretty incredible. Congrats to shareholders, by the way. You're up quite a bit.
Any thoughts on Uber? That's been flat as hell this year too. That's been basically another stable coin.
So kind of related to Uber. I know that a lot of people that follow Mid are also into Grab. I'm not in Grab. I've never seen it as that great of a play, but I think that Uber might be weighing on other smaller names like Grab, although it's not super tiny in the short term. I think Uber, like it's kind of a misperception of a few different things, but like it's a platform. It's been beaten up some just because it is a SaaS play and it's in that bucket. But I Uber's never been at the point where I'm like, oh, I'm going to invest in it over something else. But I think long term, like it's attractive. I think that there's things that are better opportunities, much like Grab. Although out of the two, I'd rather invest in Uber.
Yeah. Thank you for more jewels. You're a rich man, Roy, with all the jewels.
Yes. Emeralds and rubies are also welcome. No, just thank you guys.
Exactly.
Really appreciate it.
Why invest in non-US companies? Agreed. Like, if you're saying Grab versus Uber, I would also go Uber.
Well, you're a Nebius.
Nah, that doesn't count. That one's a good company.
There are amazing international companies, but yeah, I am very biased towards America as an American. I think that bias has lined up well with stock outperformance, and yeah, I'm invested accordingly, mostly in the United States.
I am also biased as an American. Did y'all talk about the SoFi upgrade? Yeah, Piper Sandler upgraded, or they initiated coverage of SoFi today at $22 per share at an overweight rating.
Yes,
And
and the fun thing is, do you know what they base their model off of? Like, what kind of growth for SoFi?
no, what?
It was in the 20s of percent.
Really?
Yeah.
Oh
Which
yeah,
is
22% CAGR, but it's CAGR.
Yeah.
That's
Which, of course, Noto is guided for 35 over the next 5 years. So, overweight 22, awesome. That's cool. A lot of times when analysts break into a stock, they are a little bit cautious at first. This is one where I think as they pay attention, unless it would be weird to be like, hey, outperform, this is a great opportunity, high growth personal finance story, and then they're guiding for mid 20s growth. Yeah. But it's nice to see. Always nice to see more analysts covering it.
Yep, definitely nice to see. Travis, I can get you a green card. Well, where is it then? Where is it? Because I would love that. Any risks to breaking up the business to Meta?
I don't think
I
so.
mean, I think there is another lawsuit that they have that's not the youth lawsuit. It's an FTC antitrust lawsuit that basically back in 2025, a judge ruled in Meta's favor around the WhatsApp and Instagram breakup risk. And Meta won that lawsuit in 2025, but in 2026, on January 20th, the FTC came back and they said they're going to appeal that ruling. So, yes, the breakup risk is reduced, but it's not fully dead for Meta. It's going to move to an appellate court here shortly. I don't know if that's going to be this year or next year, but essentially, there's still some merit to being worried about a Meta breakup. After Google, though, and the fact that a judge ruled in Meta's favor in 2025, I just don't think it's realistic. But, people will spread FUD for whatever reason, right? So is there any risk? It's a non-zero risk, but probably a near zero risk. All right.
I agree.
How about the parents take responsibility for giving their kids access? Yeah, we don't talk about that, do we?
It's, I mean, it's easier said than done. Depending on where they're going to school and how you do school, electronics are usually a part of the picture, unless you're doing something very, very unusual, whether it's public, private, or what have you, even homeschooling. And so yes, schools will put on blockers and things and block certain sites, but kids are not idiots, and there's a lot of workarounds, and they're very, very good at it. One of those that's really funny is to see traffic on chess.com. I don't know if it's the case this school year or not, Tevis, but the last couple of years, traffic goes down immensely when the school year starts because the kids, they also like to play chess. So it's funny.
Yeah, look, man, I think putting the onus on the parents is kind of unfair until we get into a lawsuit situation where it's like, hey, man, I'll drink energy drinks all day long, every single day until I have a stroke. And then
I'll drink to that.
And then I'm over here suing Monster and Celsius. It's like, at what point does personal accountability stop? It's probably at that point where you sue somebody over the repercussions of your own actions. Can parents justifiably control their kids' social media? Absolutely, they can. Will the kid be a social outcast because this is a society that we have set up? I mean, maybe in North America, I mean, there's plenty of places. I mean, the kid can freaking be in a Mormon community or something like this where they don't believe in technology. I mean, like, I'm making the extreme case, but the point is like, I'm sure there are kids that are raised in a household where their social media is heavily monitored and heavily regulated, and that's fine, right? But then, like, people will draw it to the extreme on the other side as well. If I do something, I can't expect to sue. Like, the audacity of some of these people to sue this company for like, dude, you downloaded the app. You downloaded, like, it didn't come pre-built in your phone. You had to go to the app store, download the app, put your personal freaking details in, and then go and manually add all your freaking friends, follow them, create content. And then you're like, oh, I used your product, therefore you're responsible for me. No, it's like, at what point do you take personal accountability? I don't know.
I guess that's for the courts to decide.
I guess so, man. I guess so. Did Meta already start reserving cash?
No.
Meta has about $90 billion in cash, if I'm not mistaken, as of the last quarter. So they would have more than enough to cover this in a lump sum payment, barring some like crazy extenuating circumstances. If this is actually over $100 billion in the fee.
Yeah, their net cash versus debt is like a little over 10 billion. So, but I mean, like almost every company at that stage carries some debt.
Yeah. Let's see. Devil's advocate. We regulate speed limits for good of society. We can regulate any product for good of society. Yeah, the problem here, Guillermo, is where do you draw the line? If you're going to be a moderator, where do you say that, we're going to regulate this platform versus that platform? Like, they were talking about outright banning TikTok in the US, right? Like, where do you draw the line? And then how can you say that, oh, well, this is bad and that's good? Like, let's say we ban Instagram, right? Are you also, or we put an time limit on everybody's phone on Instagram, saying if you're under 18, you're limited to 2 hours a day, let's say, right? You have to do that with TikTok. You have to then do that with YouTube, right? Do you also do that with Facebook? Okay, let's do it with Facebook. Do you also do that with Reddit? Okay, let's do it with Reddit. Do you also do that with, I don't know, go down the, do you do that with chess.com? Because that's also a waste of time. So the point is like, where do you draw the limit on a lot of these things is always going to be a gray area. It's never black or white. And so,
well, let's just do it this way. It's whatever I like, don't limit. Whatever I don't like, then limit that. That's how most, I'm just saying that's how most people approach it. And the problem is you're going to have some things that you like if you get into this kind of environment that will be heavily restricted. So if, like, for me, I love caffeine and like, hey, we're going to control that. You can't drink it. Or maybe like it'll be, I can't remember there used to be laws that you couldn't like consume, sell, have liquor. I guess individually you could have it on Sunday. We could go back to that with social media. Like, hey, all these sites go down on Sunday. You can't use it at all. I don't think that that's great. Like, I know that you probably read or watched Ready Player One, and that was one of the solutions, at least in the book. I don't remember how the movie was, where they're like, hey, let's limit the amount that you can actually use the metaverse, and so you can't use it every single day. And I don't think that solution is really going to be a solution.
Yeah. Funny enough, Roy, when I was in the UK in July, I had to put in my ID to buy energy drinks. Like, I would buy a Monster before coming onto the show. And literally the cashier guy had to stop what he was doing, come all the way around, check my ID for buying an energy drink. And I'm like, dude, you see all these fucking white hairs? Like, let me have the Monster, please. But it was the most irritating thing in the world. And can they do it? Yes. Is it good for kids? Probably also yes. But at what point does the inconvenience of many outweigh the maybe deeper benefit of a few? My point is like, we're going to get into this esoteric philosophical, back and forth that anytime you take the middle ground, it's never going to be enough for many people. Yeah, there's ID for energy drinks in the UK. This is the same UK who's like, hey, people are stabbing each other. Let's just cut the tip off the knives because that's going to solve it. So
it's like Canada 10 years from now.
Probably not even 10 years. Probably like next year.
Oh, man.
Let's move on. Would you choose QQQ or S&P 500, or would you split? Good question.
NASDAQ.
Yeah. I would probably also say QQQ. The reason why is S&P is increasingly more and more tech weighted every year. So at some point, it becomes very difficult to distinguish or to have that diversification, because even the market right now is so heavily concentrated into the hyperscaler names that it just skews all the results. So there's less of a variance between these two today than there was, call it 5 years ago or 10 years ago. So if that's the case, then I'd just rather go QQQ.
I saw an interesting post too on the S&P 500, just that how strong it got. And I believe Verizon was removed, and it's look at free cash flow and everything. It's a really strong company versus so there's still some, I would say, dross and some weaker companies and things that maybe they should remove. And, if they're trying to maintain some sort of equilibrium between tech and non-tech, maybe not. But man, it's pretty incredible that 10 years ago, it felt like there's a good number of fairly weak companies. Maybe 500 is too big of a number to like today, where it's like, maybe we need to make it at the S&P 600. I don't know. I mean, I don't think we're at that point, but at some point down the road, they probably won't do that, but there might be another index that they come out with that's similar. But yeah, NASDAQ is...
Maybe at that point, so if I could finally get in, right? 100 more companies allowance, maybe SoFi will make it this time.
Yeah, like the hardest thing is not just the market cap size for SoFi, but there's a lot of really good companies that are starting to hit those requirements, and it may be a little bit of a wait for them. No, that's not the end of the world. That's certainly not like the bull thesis that is reliant on them getting S&P 500. They will at some point, but it may take a little bit longer than we expect. So we have a question that's going to skip the line. So Captain Dad, thank you for that donation of $5. You have to invest 100% of your portfolio in a single stock for 1 year. Which stock do you pick? The amount allocation, the 100% would make me more conservative. So I wouldn't pick the name that I think that would outperform the most. And that would probably just be NVIDIA. I think NVIDIA will be giving some nice upside, but I also think downside is pretty limited. Could be wrong on that, but I would pick NVIDIA based on that. Yeah. Good guess, but no, not the top guess.
Close.
For you, one year. Would you go Nebius?
Do I have to go from today until August 17, 2027?
Mm-hmm.
I don't know. Yeah, maybe. Maybe never.
I'm really thankful we don't have to. Yeah. I'm really thankful we don't have to invest like that. Like hold a year no matter what, no matter whether the thesis changes or not, no matter whether it smashes your price targets. But yeah, honestly, okay. So
we might be thinking
maybe with Nebius. What else would you be interested in possibly doing? Would that be Meta?
So maybe Meta. I mean, yeah, Amazon I think is better. Yeah, I really like Amazon actually. Whoever said that.
Not bad. Yeah, that's a good one.
Amazon,
Microsoft. Mm-hmm. Maybe Amazon over Microsoft at these levels.
So it's actually interesting that you say that, Roy, because I think we would probably outperform if we could only go all in on one name and we couldn't really change over the course of the year. You could argue you would underperform because there's unforeseen circumstances that could change your thesis, but you would spend a long time thinking about what you want to get in and what the thesis is and what does the world look like a year from now, and where's the macro going and this and that, versus right now it's like I've bought in stocks on a whim, before.
Yeah. Well, I think, at least the way I approach it with the stock gift giving challenge at the end of the year, we didn't do it, but in 2023 it would have been Palantir for me. So if I was all in Palantir, that would have been an amazing year. And then 2024 was Robinhood. 2025 was Hims, which that one wouldn't have worked out well. It initially started off well, and then this year's Air Tesla, that's when I was kind of pitching it, I was like, this I think is my next 10 bagger. I'm not that far away, which is crazy. So there is something like you said, and it makes sense. Like that's one of the things I've been like kind of thinking, and it's why I'm weighted a little heavier than I would typically be on CoreWeave. FIGR a little bit less so, but if I'm really feeling a very strong conviction there, I'm happy of not going higher than 10%, like in hindsight, obviously, with Air, just because it was such a small play. But I think I'm comfortable, like maybe even going up to like a 25% allocation of my portfolio on something if I'm really like seeing a strong opportunity.
Yeah, I mean, look, I think I really like how Chris and Matt approach it, where they have
the majority of their stuff in the index, and then they say, hey, look, I'm going to split up 5 big bets, and I'm going to put however much. Let's say you have a 100K portfolio. You would say 50K is in QQQ or in SPY, and then you have 5 big bets, and they're 10K each for the other 50K. And so half of your portfolio becomes only 5 bets. You can't make more. Okay, these are the slots you have to hole punch in. And then the rest is just the index. And that's kind of interesting to me because if you're right on your bets, there's an outsized return, obviously, in a multiple. Like Matt bought Rocket Lab at $4 as one of his bets. His other bet was Robinhood and his other bet was Palantir. So like those bets have done tremendously well for him. But the point is if you think really deeply about only having 5, Warren Buffett, called them the hole punch. The hole punch is like you only have 5 slots to hole punch in, and that's it. You're gonna think deeper about it. It's probably gonna be a better pick, and you're still gonna be performing to the index, but you have an outsized risk of beating the index every single year because of your big bets playing out, and that could be really interesting. So I don't know, Captain Dad. Thank you.
Thank you very much.
Speaking of, Chris Patel made an argument for BSP today on Amidst Close. Wondering if you guys have looked at it. Didn't realize their free cash flow looked so good. I don't know what BSP is.
Bending spoons. It's like SoftBank in that it's a tech or really software conglomerate, but the difference is that they take whatever that code is and they actually alter it. Now they're using AI. I don't really fully understand it well. I did look into it just a little bit, and I need to look into it more. It's interesting, but it's also international. I don't know. I read a couple of things that was put out in their last earnings call. They reported, back on August 13th, so fairly recently. This is what they stand at in terms of long-term debt. So I know a lot of people are citing their free cash flow and free cash flow growth. You also need to you can't look at this in isolation. So revenue, by the way, is growing insanely. A lot of that is because they do have an intentional strategy of merger and acquisition. They even own things like AOL. But yeah, this cash and cash equivalents is staying relatively fixed. They do have a large amount of long-term debt. Free cash flow is ramping. And then here's the revenue quarter over quarter. You can see 126%. So it's pretty phenomenal growth. But yeah, I don't really know enough about it. I would need to listen to Chris a little bit more on it, and then do my own research as well. So it's interesting.
Yeah, a lot of people we know are getting into the bending spoons. I don't know too much about them. Face Makerable says Oakland very liberal. Meta will win. Yeah, could win. Would you sell your Nebius to load up on Meta at 450? Yes, I would. Not all of it. Okay, I sold some Nebius and I loaded up on Amazon, bro, because Amazon was at 215 or 220, something like that, and Nebius was at 250, 260. And I was like, okay, you know what? let me do a quick trade-a-roni because I can trade them 1-to-1. One share of Nebius equals one share of Amazon. How crazy is that?
For me, I would not sell any of my Nebius position to load up a Meta at that level. Not even my own one and only share.
Yeah, well, okay. It's a little bit different for you, Roy.
I'm going to milk that share for a lot of content, man.
The reason you only have one Nebius share is because you did sell your Nebius position. So
I did quick almost double multiple times actually. So we'll reload it like maybe 130, 140 and I'll have fun with that.
yeah, I mean, if we go to 130, 140, I'm selling all my Meta, regardless of the price.
Well,
Buying
a lot of Nebius. So yeah.
All right. Will SoFi start running with higher EPS report in Q3? I think so.
Yeah, between that, midterm elections being nearly over, continued development of a lot of the new projects that they've launched, and then I think more rate certainty, that's going to all help SoFi. But I think in particular, one of the points of consternation with SoFi has been it's been relatively flat EPS, but
Yeah.
they're not optimized for it when you're launching a lot of things, when you're pulling forward marketing, when you have that 22% tax rate. I think they did a good job of explaining it, but I think the market also wants to see it first. So, yeah, the second half of the year should be very good for SoFi in terms of the business for sure. Stock likely as well. That saying, I did trim my few remaining options. I'm keeping all my shares.
Yeah. Look, if we expect the Fed is going to keep rates stable, that's going to be a big catalyst. The market is now going to be looking at rate cuts in 2027. That's going to be a catalyst for Nebius or for SoFi. Then you have to keep in mind the fundamentals of the business. They're assuming a rate increase. They're assuming 2 rate increases. So fundamentally, they're going to do better. And then on the other side, Chris Lapointe said this, like, hey, look, we've overspent in the first half of the year, and we have that at our discretion. So in the second half of the year, if they want to turn down that spending spigot, they can and load up more into EPS. Their guidance assumes 18 cents EPS for Q3 relative to the 12 cents that they've done over the past 2 quarters. So there's going to be a big step change into the EPS number as well. So all signs point to SoFi doing much better in the second half of the year from a profitability perspective. It's just a question of, will the market reward that? And I think because of the macro, if we get rates steady in September, then the market will in fact reward that, and even earlier than Q3. So we'll see what happens, but I think that's a very realistic probability.
Yeah, here's the rate cut or rate probabilities rather. I can't say rate cut anymore. But you can see how much this has shifted from just a week ago. We were at 19% of staying at the current level through the end of the year. Now we're at 32%, which is quite nice. We, of course, had the lowest PCI read, I believe, in the last 12 months. And then going a little bit further out, doesn't go all the way to December. I believe that there are more meetings there. I don't know why it doesn't go here. But regardless, this is for next year. They are still looking at a strong possibility of 1 rate hike or 2 even. I think that this is really wrong. I think that we might get a hike possibly this year, but I don't know. I'd put it at like 50-50, 1 hike or nothing. I think those that are predicting 2 are just way off. Those that are predicting 3 should probably get checked out by a psychologist.
Yeah, 3 is wild. 3 is crazy.
One other thing to add too, if you guys are not familiar with the rate, like these are by 25 basis points. So you can have in a single meeting a move up by like 50 basis points, which is considered 2 rate hikes. So just kind of keep that in mind. Very unlikely though, like, barring something breaking. Between the job weakness at the last report, that's why these are moving, that and the inflation read.
Yeah. All right. Let's see here. What kind of size super chat we need to get Roy in the ring?
Yeah, I'm a lover, not a fighter. Actually, one of those nice things is like my natural face, like it looks almost scary, and I can look scary very easily. So I've never been in a fight. I don't think I'll ever need to be. I have come close twice, including one time when I was very, very strong possibility of either being bugged or murdered. But yeah, Angry Roy came out and the guy took off. Memphis is rough, man.
I grew up
Sorry,
in
no,
Eastern
look at
Europe, so trust me, I know.
At the time we were living in Memphis, it was the highest homicide rate per capita in the United States, and it just
It's wild.
yeah.
So how much? You didn't answer the question.
Yeah, I unless you want me to get beat up, I don't think you want to see that. So
You're fighting Tanner, bro.
Tanner is going to be tougher than you think, but I think I could take Tanner. I mean, size really does count for a lot. I don't know that he has any kind of training or anything, so I could take Tanner. You, I think, would probably crush me. So
I don't. We've never met in person, bro. You don't.
I could take a Mitt. I think Steve would be. He looks huge. He is smaller than me. I think that he would trounce me. I don't even think that would be close.
No, dude. Steve would be slow as fuck, and he'd get winded after like 3 shots.
I wouldn't want to get hit. I guess I'd have to work on dodging because he like his shoulders, dude. Like yeah.
Yeah, no, Steve will. If you get caught by Steve, you're out.
Yeah.
But that's a whole game with Steve. Yeah, in Albania we fought for bragging rights just to check who's stronger. Okay. Yeah, this was the first good question we got. Roy throwing hands behind the keyboard. My grandma can take Tanner out. Oof. Yeah, Steve does have haymaker potential. I agree with this 100%.
Yeah. I mean, like one hit and I could just be out. Yeah.
All right, let's
14 minutes, 21 questions. So let's hit
Do you have iron? No. Where do you see the blended revenue per megawatt in 27? Do you anticipate short-term contracts as a percentage of revenue increasing over time? I think we're going to see short-term contracts increasing over the next 12 months. Ultimately, short-term contracts are going to decrease over the next 3 to 5 years because all of these guys are going to have their own build-outs coming online in that time period. And so it's going to be less desperate over the high pricing. But as a stopgap, I still think we're in that dire straits where we're going to see short-term pricing increase in 2027. As for the blended rate, I'm not sure, somewhere between the 20s and 30s in megawatt. It really depends how much they lean into the short-term contracts. More joules.
Thank you for the donation.
More joules. Why are you only the one that gets joules?
So in Canada, they only have fake currency in USD. So
yeah,
thank you guys.
I don't think I've ever gotten joules.
I wonder if there's like a setting that you can turn on or something. But
this is weird.
Yeah, I need to do some research on that.
Let's see. All that milk. He's got strong bones. Yes. Yeah, just training Lake Tahoe like suck, dude. I am so jealous. I would like to train with professional UFC champions just on a skiff in the middle of the freaking water. Just if you're trying to look normal, Zuck, that's not the way to do it, man. Just train in a gym like everybody else. What's your favorite microcap?
If we're defining microcap under $1 billion, I don't know that I have one. In the stock draft, the one that I picked, AmpG, I think it's interesting. It's down massively, man. I know that they had earnings. I've seen what a couple of people have posted on it, but I don't know nearly enough about it. And everything else that I just went real quick through my list, and there's a few that I have on the watch list, but I can't say they're my favorite. Like if you're talking about below 5 billion, it's got to be Air still. Wix probably number 2.
Yeah, I mean, my microcap that I picked for the competition, Paladine, is up 34%. The Pentagon was looking at them possibly. So
Yeah.
how
Very
much do
nice.
I know about them? Next to nothing, other than just a high level. But keep it up, Paladine. You're gonna make me some charity money by the end of this year.
Yep.
What benefits do your earpods have during streaming, Roy?
That'd be good. I'll hear on here. It's not to speak through. You guys, if you've ever seen me like tune in to like Tanner's stream or an emergency stream with Tevis in the office, I just use these, and the microphone is not that great. So, since I'm in a house with the family, like sometimes I've just gotten in the habit of using them, but sometimes we're going on and it's later at night or people are sleeping or doing whatever, and this way they're not hearing this. Plus, this isn't. You can see there's not a lot of soft things. I do have some in this room, but there's a bit of an echo. The mic does a good job of filtering that out, but it does even better if it doesn't have to hear it. So,
Yeah. One burrito, dude. I am starving. I'm gonna get some food after this. So in about 15 minutes, when we wrap this up, I'm walking my way to the burrito store and I'm getting one.
nice.
How worried are we about a drawdown between now and November? I think you're guaranteed to have a drawdown between now and November. Sorry to sound like a pessimist, but the VIX is under 15. The market is running red hot. We're in greed territory. Like things are good right now. We are hitting all-time highs. You're going to get a drawdown. It's normal because there's uncertainty around midterms. You're going to have a changing of the composition of the House and the Senate. And so that's just naturally going to happen. It's one of those things that the market just doesn't like uncertainty, right? And we've run really hot. So it's an excuse for the market to take gains and lock them in, takes them off the table. I'm not worried about it personally. I'm trying to prepare my portfolio by reducing some of the exposure that I have, reducing some of the cash secured puts, having cash on hand, and maybe even trimming some of my shares. I have covered calls underwater on both Rocket Lab, CoreWeave, on Air Test Systems. I have a lot of stuff that's underwater actually from a covered calls perspective. I might let all of that go, to be honest with you guys, just in anticipation of another drawdown, and also because it's not bad to lock in games from time to time.
Yeah, I wouldn't mind, over the next couple of months getting my cash back up to probably not 5% unless something really runs, but yeah, it's below where I'd like it to, but that's because I bought something I wanted. Yeah, I'd say worried is the wrong word. I think it is likely that we will get a drawdown prior to November. I think when we get close to November, or even on November as well, I think the market's going to do very well at that point. And for most of the rest of the year, could always be some surprises. But yeah, we're in a very turbulent market, and right now it's like when you start seeing all people post lots of gains and talk about how amazing there is an investor at the next 100x opportunity, and this play that's only going to deliver a 50% return next year, that's a strong top signal as well. We're not at that point yet. Don't necessarily have to be for a drawdown, but
Agreed. When chess. I don't know. Are we going to play tonight? We're not playing today?
no, I don't have time today, but Friday we should. So,
All right. Question on AI demand. It would be interesting to know if there are many AI projects that are not happening today because of lack of compute. At work, I am limited by dollar budget, not number of tokens.
I would say no. I think the ROI is proven out enough. Not that everybody has been able to deliver that, but like case in point with Palantir, the reason why people are spending more and more is because the return on investment is substantial. And so when AI is done right, implemented inside of an ecosystem where there's tremendous benefit, the amount of spend is the wrong part of the equation. Instead, the amount of benefit. And I think that for a lot of workplaces, we've shifted from the era of like token maxing, where like Uber, for instance, I think this is actually one of the things. I don't know that it's a cause of the short term weakness that they've had this year, but I do think it's perhaps slowed down what they might do in the future because they blew through their entire AI budget in April. The era of token maxing has really shifted, especially for them, and so they are restricted. But yeah, AI projects, I would say not that limited. I think it's probably the wrong measure.
Yeah, and the market is in a place of like spend first, ask questions later, and so everybody's token maxing. I'm sure organizations are going to start putting limits on token spend at some point or another, just not in the immediate short term. Just a quick update on Vineland. Nate, our reporter on the scene, is sending us a message here. One resident here saying, quote, I drive by Vineland and there's large walls and cranes. Same resident said to vote no. She also thought the site was 1 gigawatt, whereas Vineland is 300 megawatts. So, yeah, a round table of geniuses there at the Vineland hearing. You guys are probably regretting being here instead of listening to that. But we're going to have much more on Vineland throughout the night, but we'll see how the vote goes once it's done. Yes, it's called construction. Correct. Do you think memory will continue to run? Yes, I do. I am bullish on Micron. The supply constraints, the bottlenecks are so drastic on memory that I think Micron is definitely going to go higher, especially from where it's trading right now. Still under $1,000, I believe it is.
Yeah, they're basically they're sold out on almost all types of memory through 2027. 2028 is when you see some additional supply coming online, and maybe it's not all sold at this point, but that's 2028. It's hard to say.
I immediately change my stance, and I regret everything I said on Micron. Apparently, Kramer thinks Micron can double again because the market is still pricing Micron like a boom and bust memory stock. Kramer says data center demand has become endless while long-term agreements lock in margins, making this cycle fundamentally different from what the market is used to. So if you own Micron, I'd be worried if I were you. Let's move on to the next question.
It will eventually revert to cyclicality, but this is a hyper cycle. And so it's probably going to be at least 5 years before you really start to see even the possibility of oversupply. Yeah. And that's not guaranteed by any means.
Yeah. Jokes aside, I'm still bullish on it. Tevis, which one he going to buy more now or Palantir?
So are you going to buy?
Yeah. Palantir is a little bit expensive for me. So probably now.
What if it was the price when I told you, dude, buy it instead of now?
Then I would have probably bought it.
Yeah, when we're in person, I'm going to take that paddle and just whack you over the head until you say you're going to buy.
Hey, man, we can film it for the folks at home. You could have just named a price and they would have paid you in super chats for that kind of action.
I guess so, yeah.
Yeah. All I needed to say was I'm not buying Palantir. Who knew that that's all it took?
Well, it was more buying ServiceNow, which it's they're not exactly competitors, but they're both in enterprise software instead of Palantir. I'm like, oh man. But I mean, you made a lot of money, so it was a short-term thing for you. I probably would have been as upset with you though, like if you took gains even at the top of Palantir. I'm like, dude, what are you doing? But no.
Yeah. Our politicians just trying to use Mark before midterms. He can get each one votes. I wouldn't look too deeply into this. Meta is the biggest advertising platform, and midterms are coming up. So there's going to be a lot of spend on Meta. Which one did you sell if you want to bump cash to 10% of your portfolio? I'd probably sell Air, Hood, like just these smaller positions that I have that won't really make a dent. Even if they double tomorrow, they just won't. So I'd probably sell those first before my core conviction picks.
Yeah, for me, probably Nubank. I like Nubank a lot. They had a really good report. The Super El Nino stuff, I had thought that the probability of it was softening, and a month and a half ago it was. And then when we hit earnings season, I stopped paying attention. It looks like a doozy, and that really weighs over the Brazilian economy. And it's a much smaller position today than it has been past because everything else is run, and it really hasn't. Plus, I took the options out. So that BMNR as well, not because I'm not bullish on BMNR, but I have a lot of Ethereum, and I'd rather just keep the Ethereum long term. Always said that. And it's a very small position for me. That wouldn't get me up to 10%. I'd probably have to sell. I don't want to sell Robinhood, but I'd probably have to sell some Robinhood or some Air. And of those, I'd probably rather sell Robinhood, but I'd have to think about it. Maybe NVIDIA. NVIDIA might be the answer too, even though there's a lot of upside there. Yeah, it's everything in my portfolio I want to keep, and I don't want to sell anything. That's the answer. I want those stocks more than cash. Yeah, probably Air, I would say, just because it's run so much and it's a little ahead, but there's some good reasons. It's not baseless speculation here. I went back through one of the things I've learned to do is, especially during a busy earnings season, and if I'm covering the call live, it's so easy to miss something. And then you go back through a second time and you're like, oh man, this is actually more interesting than I gave it credit for. And with Air, with FIGR, with Palantir as well, I've gone through and there's other things that I've noticed that the first time was just like, yeah, that's nice. So I still need to go through SoFi's again and also Robinhood's. But
Yes. Thank you for the VG video. Yes. Is there a vote tonight at Vineland? Yes, there is. We're going to hear what happens once that vote is done, which is going to be later. Let's see here. Oh, we're at 2 hours. So I think let's just try to spend maybe a minute or less on these.
Yeah, that sounds good.
When will SoFi catch a bid? I mean, look, investing in SoFi is just an exercise in patience. And if you have it, then you're going to do well. If you don't, then I'm sure that there's faster dopamine mechanisms for you out there in the market. But
probably after Q4, I think fintechs will do pretty well.
Is FIGR the next Palantir?
No. Great business, but no. It's the next Fannie Mae.
If SLM beat LLM for future of AI, who wins that wouldn't otherwise? Small language models?
Yeah. I think maybe he's referring to like on-prem models that are running on your device.
It's going to take longer than a minute to answer this one, I think.
Yeah, no.
Meta at 450 versus Micron at 650.
I mean, I can only get one of those, so Micron.
Okay, cool. Do you see more downside for ServiceNow in the short term? Yes. If the software trade takes profits and pulls back, then yes.
Probably not a lot, but maybe 20%. Well, I guess it depends how you define a lot.
Travis is my ETF. All right. What do we think of Bloom Energy? Generally bullish. Neither of us own shares.
Yeah, I think more bullish after the Nebius earnings call. What about for you?
I'm generally bullish on Bloom Energy.
Yeah, the one thing that is like in the back of my mind, and make sure you do your research. I would read that short report that came out maybe 3 or 4 weeks ago, and the focus was on the scandium sourcing. So that's something I don't know nearly enough about. But it seems like that they're okay. They're shipping, they're delivering. There's no issues there, but I don't know.
Any progress on the Travis and Ron fund? Dude, you know how much like paperwork we need? First of all, licenses for us to manage money. But
I just finished my PhD. No interest in learning anything for the next year.
When we move to Greece, we will start the Ron and Travis fund. When is it on the stock tank scheduled for? At some point in the near future, within the next couple of weeks, we will let you know ahead of time. I kind of want to just do it maybe this weekend, Roy.
Yeah, I just didn't reply.
Yeah, I know the guys haven't responded, but like I might just put the invite, and then if they can join, they can join. If they can't, because like trying to coordinate with all these people is just like, yeah. So maybe this weekend. Are we making a GTA gang? Yes. Because you're not playing GTA, I'm guessing.
No.
Yeah,
I played it when it was just GTA. Like that's how old I am. There wasn't a 2 or anything like that. So
The good old days. Am I rolling my covered calls on CoreWeave? I haven't looked. Maybe. I'll let it run to the very end, though. I think they're expiring August 28th, I want to say. So probably by next week, I'll let you guys know what I end up doing with that. Do you think neoclouds will run into Anthropic IPO, then fade after the IPO?
I think that's pretty reasonable. It wouldn't surprise me at all. I don't think that they'll fade all the way like what happened with a lot of the space names with the SpaceX IPO. But yeah, if there's something that's going to run, it'll be them, I would expect.
Okay, last question. I want to make it this one. How is Roy's movie night with his daughter? Is she a Marvel fan now?
She really enjoys Marvel. She's seen the new Spider-Man movie like twice now, and Thor, the first one is the next one. She really wants to see Avengers. She's not seen it yet. I'm like, you got to see Thor at least first, and we'll go from there. So I think that we have this whole list, and then but school year has started, so it makes it a little bit more challenging. But yeah, she already told me, and she's 13. She'll be 14 in November. So about that age, most kids stop dressing up for Halloween unless they just go into like a friend party or something. But she's already going to dress up as Gwen. So Spider Woman.
I don't even know who that is, but that's great.
From Into the Spider-Verse.
Yeah, Michelle's going to get mad at me again for not watching this. But that's our show for today, folks. Thank you so much for being here and supporting the channels. And lovely meeting you guys in Toronto. The ones that I did meet, Roy, you got a lot of kind words and praise from folks. And I told them, I said, hey, look, maybe 2027 we might do something in Houston. We don't know, maybe. Chess is not on the table for tonight, unfortunately. I love how that's becoming a thing now. And just
I love doing it. Don't have time today, but thank you guys. We have the best audience in the world. You guys are amazing. I would love to talk to just Tevis, but with you guys, it's a whole lot more fun. So thank you guys for all the support along the way. And I am considering a Houston meetup next year, but no concrete plans. Got to probably wait a couple of months before we can even pencil something in, but we will let you know.
Yeah. And don't be sad because we will continue the chess on Friday. Thanks all. Good night.